I want to tell you a little bit about the project that has allowed us to organize this seminar, as well as several other educational events and workshops like this. So this seminar is part of the Hudson Estuary Watershed Resiliency Project, and this project is a combination of research, demonstration, and educational outreach projects to address the challenges of flooding, stream and watershed management, and climate change. As part of the project, Cornell University and Cornell Cooperative Extension, in partnership with the New York State Water Resource Institute at Cornell University, and with support from the New York State Department of Environmental Conservation Hudson River Estuary Program, is conducting this educational initiative with a focus on flood resiliency and climate change. And the idea behind this initiative is to provide communities with the tools that they need to enhance their understanding of stream dynamics, floodplain function, and watershed planning to reduce their vulnerability to floods in this era of heavy precipitation events. So we began this project about this time last year and really hit the ground running in January with our educational outreach to municipal officials. We've been doing presentations to many of the town boards in Dutchess County, and we'll continue to be completing additional presentations. We are also partnering with educators in Putnam County, Greene County, Columbia County, and Orange County to deliver this as a regional network of cooperative extensions. We're doing brief presentations to town boards, but we're also working on more in-depth trainings as well as this seminar series. And then in the fall, we'll also be rolling out education to landowners as well, specifically streamside landowners, and talking to them about what they can do to reduce impacts of flooding. I would like to highlight a few people who are in the room tonight. First, Supervisor John Hickman from the town of East Fishkill. I'd like to thank him as well as the town for hosting us tonight. They're always a great partner to work with, and we have really great events here. I'd also like to point out Scott Cuppett from the New York State Department of Environmental Conservation Hudson River Estuary Program. He's one of our partners on this project as well. And then my colleagues at Cornell Cooperative Extension in Dutchess County who are also working on this project. So our Environment and Energy Program Leader, Allison Alfreshan, our Senior GIS Resource Educator, Neil Curry, our community educators, Camille Marcotte and Sean Carroll, and then our educator from the county of Putnam, Diane Olson, is also here tonight. So without further ado, I'm going to turn it over to our speaker, Bill Neckerman.
Okay, thank you, Carolyn. Hopefully this little cough won't get in the way. First, let me talk about what we do at DEC in floodplain management and our role in all of this. Up in Albany, we've got a small staff, 3 people, soon to be 4, working on the floodplain management program, and our primary responsibility is to make sure that local municipalities, towns, cities, and villages understand and carry out their responsibilities as participants in the National Flood Insurance Program. The National Flood Insurance Program is a program operated by FEMA, the Federal Emergency Management Agency, and local communities voluntarily participate in the program. But it's like a lot of federal programs, it's voluntary with a carrot and a big stick. So the carrot is that when a community agrees to participate in the program, flood insurance can be obtained in that community. Flood insurance for decades has not been available in the private sector. Private insurance companies have gotten away from the business of offering flood insurance because it's a type of insurance that the insurance industry refers to as adverse selection, meaning the only people that will voluntarily purchase that kind of insurance are the people that are most likely to use it, and that's not a good business model for the insurance agency. So in 1968, Congress passed the National Flood Insurance Act, allowed the federal government to sell flood insurance, and there's a lot of misunderstanding that the insurance is subsidized. The insurance is not subsidized by the taxpayer. There are cross-subsidies within the program itself. But as a result of those cross-subsidies and the inability of FEMA to price insurance in accordance with risk, and the fact that our damages keep going up, the fund is very deep in the hole. So that's led to a lot of changes. But getting back to the local community responsibility, in order to participate in the program and allow flood insurance to be sold within your community, you agree to adopt a flood map that FEMA provides, and there are relatively new flood maps in Dutchess County, were recently adopted. And you agree to manage development within the areas shown as flood hazard areas on those maps. And by managing development, it means that if somebody is going to develop within those floodplains, they have to meet certain standards. Now, if a local community fails to do that, fails to adopt the map, fails to enforce its standards, or simply does not join the program, then flood insurance cannot be sold within that community. And when I say community, I mean a town, city, or village in New York. So flood insurance cannot be sold within that community, and that essentially means that people are going to have a very difficult time obtaining a mortgage for any structure in the floodplain. Federal law requires a flood insurance policy as a condition of a mortgage for any structure that is within a FEMA mapped flood hazard area. So without the ability to get flood insurance, the banks are not going to offer a loan. The other stick is that if a community fails to participate in the program, certain types of federal disaster assistance become unavailable within that community. Specifically, any assistance to either private or publicly owned structures. And when I say structure, I'm talking about a walled and roofed building. I'm not talking about a bridge or a culvert. So without being in the program, you would not be eligible for federal individual assistance, public assistance for publicly owned buildings, individual assistance for privately owned buildings in the event of a federal disaster declaration. So that's a big stick, but it's also a big carrot. And as a result, out of about 1,500 eligible municipalities in New York State, all but about 8 of them participate in the program. But I also often say to people, well, 99% of them participate in the program. About 50% of them know that they participate in the program. For a lot of communities, you passed a local law back in the 1980s. You're a few generations removed from that in terms of local employees, in terms of supervisors and mayors. And if you don't have a flood, or if you don't hear from us or hear from a disgruntled constituent, you may not be that aware that you're in the program. However, in 2004, the state building code incorporated most of the standards that FEMA has in the National Flood Insurance Program. So just by enforcing your building code properly, you're enforcing most of what the program requires. Not all of it, but most of it. In 2007, the state building code was amended to require new or substantially improved or substantially damaged residential structures to have the lowest floor not built to the flood elevation, but built 2 feet higher. And what that does for compliant structures is it significantly lowers flood insurance rates because it significantly lowers risk. And I'll show a few slides later, but we found historically that when we've had major flood events, the structures that are built according to these standards suffer a lot less damage. In fact, in many cases, people can just clean the mud out of their driveways and move back in if they have electricity. So our role at the DEC, we don't have a regulatory role in this program, but we do have a responsibility to serve as a resource for local governments, provide technical assistance, and frankly, occasionally come to your office and look at how you do your permitting, how your development has gone. And we call it a community assistance visit. You might think of it as an audit. We're not looking to play gotcha, but we do have a responsibility in our partnership with FEMA to make sure that you're carrying out your responsibilities. So what I'm going to talk about this evening is I'm going to spend a few minutes talking about flood risk itself. And we've had our share of flooding in this part of the state. Doesn't look like that's going to go away anytime soon. And then I'm going to talk about some changes that Congress did a year ago that will have very significant impacts on flood insurance, on costs, expenses, and what's going to happen with people who live in these flood hazard areas. And then I'll conclude by offering some ways that those issues can be mitigated at the local level. I'm definitely going to say a few things that some people in the room aren't going to like. I didn't invent the law, I'm just the messenger. I'm just trying to learn as much as I can about it and provide you with as accurate information as I can. So flooding itself is the most common and most expensive natural disaster in the nation. I need to update this slide because it says $5 billion in 2010. Well, that didn't include Irene, Lee, Sandy, all those wonderful names that none of us are going to ever name our kids again. Sandy itself is looking like the third largest natural disaster in the United States history in terms of cost. Second or third only to Katrina, of course, and to Hurricane Andrew in Florida in the early 90s. Something unique about flooding, though, is that we can map it, sort of. A flood insurance rate map, which is what we call the FEMA maps, shows the areas that are most likely to flood. It doesn't show every area that will flood, nor does it show every area that's certain to flood, but it shows the areas that are most likely to flood. But these flood maps are vital tools. You need to be using them to make sure that you develop your community in a sustainable manner. They should be used for emergency management. People should be aware of them for personal protection and for property protection. So let's talk a little bit about the force of flooding. This slide illustrates standing water pushing against a house. We call it a hydrostatic force. This is one of the main causes of flood damage to structures, and water exerts the same amount of pressure sideways as downwards. Most walls are not built to withstand that kind of lateral pressure, so when you have floodwaters coming up against a really solidly built foundation, there can be the tendency to collapse that foundation. Think about the weight of water. You know how heavy it is to carry a gallon jug of water or a carboy full of water. So water weighs about 62 pounds per cubic foot. Concrete is heavier than water, weighs about 140 pounds per cubic foot, but a residential slab is only about 4 inches thick. So if you think about the force of water pushing against that concrete slab, the water can very easily buckle it. 3 feet of standing water, we've seen in many instances, is enough to collapse a foundation wall. Basement floors, basement walls are particularly susceptible. After flooding, we always get complaints that FEMA doesn't insure damages to the basement. Not entirely correct. FEMA insures some damages to the basement. They will insure damages to the foundation. They will insure damages to the utilities that service the home, the furnace, the water heater, even a freezer, air conditioning equipment, electrical components, those sorts of things. What they will not cover is somebody's finished basement. You have a finished floor, you have carpeting, you've got your man cave down there with your big screen TV, and none of that stuff is going to be insured if it's in the part of the structure that is below grade. And that's because that's where the water goes. So buoyancy forces. So a lot of people will say, well, I'm going to just build the most solid structure I can figure out how to build. No water is going to get in this structure, but the water is still exerting force on the structure. So with buoyancy forces, you're not talking necessarily about breaking the structure apart. You are talking about potentially turning the structure into a yacht. If you think that water can float an aircraft carrier, water can also float a house. And we've seen instances of this. One particular case, and I hate to use North Dakota as an example, but it provides a good one. In the Red River of the North, it's a very broad floodplain. They know months in advance when flooding is coming. The flooding flows north into Canada, and they know when the snowpack and when the ice jams to the north mean that the water is going to back up. So there was a major flood, I think it was in the late 90s, and there was a new subdivision in the floodplain. they had to evacuate. They knew the water was coming. They had plenty of time to evacuate, so they had to evacuate. And this new subdivision was built with very tight, watertight foundations. The community, I think this was Fargo, notified the people in the evacuation zone that before you leave your property, fill your basement with water. And people were thinking, what? And the purpose of this was to equalize the pressures on the building. So the people that did that, that filled their basement with water, not that they didn't have damages, but the structure survived. Many of the people who failed to do that, the house became a boat, and some of these houses just popped out of the ground. So think of what that buoyancy force can do. I didn't bring my laser pointer with me, but these are a couple of houses that have gone mobile. Cars particularly susceptible, and these are not cars parked by my daughters. And RV parks, we've seen a lot of damage in RV parks through the years. Hydrodynamic forces. The force of the water pushing against a house. Anybody that has waded through a rushing stream knows that force of water. Raging floodwaters a foot deep can sweep a person off your feet. And I'm always dismayed after every flood everywhere in the nation. There are always pictures in the paper of children playing in the floodwaters, which is dangerous for a number of reasons. One is this, that they could end up getting swept down into the river. But second, because floodwaters are often contaminated. And here's an example of hydrodynamic forces. We all know about wind threat. You know, we think about 100-mile-per-hour wind, and our building codes make us build against that force. But water moving 4 miles per hour has the same force against a structure as 100-mile-per-hour wind. So debris impact forces, that sometimes causes the most damage. Let's say somebody builds a house, elevates it properly. They elevate it to 2 feet above the base flood elevation, which is what the building code in New York State says. And their insurance agent comes to them, or their bank comes to them and says, you need flood insurance. That flood insurance, by the way, in that scenario will be very affordable, only a few $100s a year. But some people are still going to complain that, why do I have to get flood insurance? I'm above the flood. But there's still something holding your house there. The house isn't floating in midair. So you still have the potential for trees, propane tanks, whatever floats or moves by floodwaters, to be smashed against that house and cause damage. And the flood insurance will still protect against that damage. And then after and here's some examples of some debris impact. The debris in some cases can be ice. Very old picture, I think from 1910 in Herkimer, New York. Of course, we just got some additional flooding in Herkimer. I'm not sure whether the debris impact is the bridge against the house or the house against the bridge. But then after the flood goes away, and think of the things that are soaked with water. As I said, a lot of times this water is contaminated. That doesn't go away. The smell doesn't go away. The mold and mildew lingers and causes long-term health effects. Also think about the things that are stored in the floodplain. Here's an example of some sort of an industrial lab or workshop with hazardous materials upset by the flooding. Here's a dairy plant in Delaware County that got flooded a few years back. And there's some barrels of who knows what floating in the floodwaters. So I'm going to briefly get into some of the definitions, some of the standards, some of the requirements. And first I'm going to throw out this term. The term is the Special Flood Hazard Area. So what is the Special Flood Hazard Area? On your new flood maps, it's a blue shaded area on the map. It has either a Zone A or a Zone AE associated with it. Down in the coastal areas, they could also have a Zone VE, which is an area that has wave run-up on top of the flood elevation. This is known as the Special Flood Hazard Area. This is the area that is being regulated. This is the area that has mandatory flood insurance purchase requirements. So people think of it as the 100-year floodplain. It's more accurately thought of as the area that has a 1% or greater chance of flooding every year. And one of the common comments that I get from residents, they'll call me up and say, we had a 100-year flood and I didn't get wet. Why is that? And sometimes my answer is that there was a 100-year flood somewhere. There might not have been a 100-year flood where you live. Every flood is different. Every flood has areas that the flooding might exceed what you expect or might not be what you expect. Streams get blocked and meander, get blocked by culverts, get blocked by bridges, and materials that get caught in those culverts and bridges. So every flood is different, but I recall one call I got, and I think it was a woman in Dutchess County, and she said, well, we had a 100-year flood for Irene. And I said, well, Dutchess County had a lot of water, but Dutchess County didn't have a 100-year flood. There were areas in the Catskills that did, but every watershed behaves differently, and the precipitation is different in different locations. But within the Special Flood Hazard Area, it's a statistical analysis. It's the idea that within this area, you have a 1% or greater chance of flooding every single year. That 1% per year translates to 26% over 30 years, which is why insurance companies won't insure it on their own without federal involvement. Think about taking on insurance for something that you're almost 1 in 4 chances of filing a claim within a 30-year period. So the Special Flood Hazard Area, the flood that occurs there, that fills the Special Flood Hazard Area, is known as the base flood. But people also don't really fathom is that the entire mapped floodplain, the entire Special Flood Hazard Area, is not 1% per year. The edge of it is. The deeper you go into that floodplain, the greater the probability of flooding is every year. So it might be 2% per year, it might be 10% per year. So the whole floodplain doesn't behave the same. Here's an example of your new flood map. I tried to choose a piece of a panel that shows a few different things, and this shows areas in the town of Poughkeepsie, the town of Wappinger, and the village of Wappingers Falls on the panel. Here's the Dutchess County Airport, so you can place where that is. So these blue shaded areas, that represents that Special Flood Hazard Area. But there's something else in here. There's, within the blue shaded area, there's a diagonal white stripe designation. What that represents is the regulatory floodway. The floodway is a part of the floodplain. It's a narrower part of the floodplain. And those are the areas that need to be kept free of new development in order to pass that base flood, that 1% flood, without cumulatively increasing the height of that flood. It's also the most dangerous areas, the area that tends to have the most rapidly moving floodwaters. So for development standards, if somebody wants to build a house over here, they're not prohibited from doing that, but they need to meet elevation standards. If somebody wants to do something over here in the floodway, they're required by state building code, they're required by FEMA regulations, they're required by your local law to do an engineering analysis, and that engineering analysis must conclude that that encroachment into the floodway is not going to increase that base flood elevation, that 1% chance flood elevation, by any measurable amount. And is the gentleman in the room that I talked to about that this morning? Okay. Hi. So this is an example of the maps that were recently adopted by Dutchess County communities. Another item on this map, and you may not see it too well, but there's a black shaded area, black dots, and that represents the 500-year or 0.2% per year flood zone. Generally, it's a fairly narrow zone compared to the 100-year, unless you've got a very flat area without much topography. In that case, it might spread out more. But the 500-year flood zone does not have any regulatory standards attached to it. It's placed there so that local communities can use that for planning guidance. You might not want to put your only fire station within that zone, for instance. So we'll get back to definitions. The definition of the base flood is the flood that has a 1% chance of being equaled or exceeded in any given year. Often, but we're trying to get away from that terminology, called the 100-year flood. And then you have these probabilities, and the whole thing is a system of probabilities. 26% chance of occurring over 30 years, 39% chance over 50 years, and 63% chance over 100 years. And then we have these 500-year floods. And I've been in this program since 1996, and when I came into the program, my predecessors had retired, and then I came in with a partner, and we were told, this is your program, it's time for you to learn it. So I'm trying to figure this program out, and I opened up some flood maps, and I see these definitions for 100-year flood and 500-year flood, and my first response was 500-year flood, that's kind of biblical, isn't it? But it's not. It's also a statistical probability. It's the 0.2% chance flood, annual chance flood, which translates to a 6% probability over 30 years, which is greater than the probability of filing a fire claim over that same 30-year period. And in the last, a couple years ago, I put together a slide. I don't have it in this show, but I put together a slide of all the 100-year floods we've had in New York since the early 2000s. And I think I started in 2003 or 2004 at least. And since 2004, we've had at least one 100-year flood somewhere in the state every year. We've had several 500-year floods in different locations. Certainly Irene resulted in 500-year flood elevations in the Schoharie Basin and in some other places. So I'm going to give you my 3-hour floodplain management course in the next 2 slides. And this is, I do offer a 3-hour detailed National Flood Insurance Program course for code enforcement in which we get into the nitty-gritty details of how to design a structure in the floodplain. So here I'm going to give you the basics. No basements. If you're going to build a new house, or if you're going to have a substantial improvement to an existing house or substantial damage to an existing house, and when I say substantial improvement or substantial damage, substantial improvement means that you're adding 50% or more to the market value of the house with the improvement. Could be an addition, it could be a rehab. Substantial damage means that you've had some damage to the structure. It could be a flood, it could be a fire, it could be a wind event, but the cost of making that structure whole is 50% or more of the market value of the structure prior to the damage. Those are treated as new structures. In all those cases, you can't have a basement. And then we get a lot of confusion with, well, what do you mean by a basement? The definition of a basement in this program is any part of the structure that is subgrade on all sides. So if you're in this lower floor area and you have to step up any place around the house to get to the ground, it's a basement. And it doesn't matter if it's a dirt floor, if it's a root cellar, if it's a crawl space, it's below grade, it's a basement. So the rules are that for development in the floodplain, you may not have a part of the structure that's below grade on all sides. If you do, your insurance rating will be based on that elevation. That will become the lowest floor for insurance rating. Now, if you've got a studied floodplain, which means you've got a base flood elevation attached to it, then the lowest floor must be at least 2 feet above that base flood elevation, that 1% chance flood elevation. And there are ways to do that. You can do it on fill, although think about when you do it on fill, it means you're displacing storage area for floodwaters. You can do it on a solid slab, or most commonly you can do it on a raised vented foundation. Purpose of the vents, we talked about the forces of the floodwaters on the building. The purpose of the vents is to equalize the forces of those floodwaters. There are some floodplains that don't have detailed studies attached to them. They don't have flood elevations. It's mostly in rural areas. They're kind of quick and dirty studies, although the techniques that the used to do that are much more detailed than they used to be. But if you have one of those areas, then the minimum standard is that the lowest floor must be at least 3 feet above the highest grade on the footprint of the structure prior to construction and prior to land clearing. Almost all development in the floodplain requires a permit. So, building code covers buildings, but a parking lot in the floodplain, fill, excavation, farm structures that are exempt from building code, anything that's done in the floodplain is subject to a local floodplain development permit. If it's not structural, if it's not a building, the things that you're concerned about include, is this development going to potentially increase the flood risk to somebody else by displacing floodwaters? Or more directly, if it's a floodway encroachment, then there actually has to be an engineering analysis that concludes that this development is not going to increase the flood risk to anybody else. So those are some of the basic standards. Some other things to think about is storage of materials may require a permit. Think about things that go mobile. One of the more difficult things we have to deal with are things like storage sheds. But storage sheds are very light, they easily wash away, and our guidance for storage sheds in a floodplain is anchor them and make sure they're vented, and then they should be okay. If it's a new structure, an elevation certificate is required. It not only gives the local code office the information they need to properly inspect and properly permit that structure, but it also provides the resident with information they need to get their flood insurance properly rated, and it protects everybody. Some things to think about. Is this development going to require emergency rescue? Maybe the structure is high and dry, but you can't get to it, and you've got a disabled person. So these are things. This is not in your local law. This is not in the state building code. I just present this as something for local communities to think about. Keep the bulldozer out of the creek. I've been dismayed after the recent flooding in the Mohawk Valley the past few weeks of seeing pictures in my local paper of bulldozers in the creek. Scott can talk to you about that one. But notice how I passed the baton. In general, if you straighten a stream, if you clear out a stream, what you're going to do is you're going to force that stream to have more energy. It's going to move faster, and when it moves faster, the first bend that it finds, it's going to want to do something with that bend. Also, streams carry a lot more than water. Streams carry a base load of debris, gravel, rocks, depending on what it is. And people will look at that stream and say, hey, there's a gravel bed. That's got to be getting in the way of the water. But if you look at the cross-section of the stream, every stream reaches equilibrium. And if you look at a stream, say, with a gravel bed, you'll probably find that right next to the gravel bed, there's a channel that's deeper than the part of the stream that doesn't have a gravel bed. So it means that the stream might be a very healthy stream that's doing what it wants to do and doing it efficiently. Also, after you get a large flood, and I think there's actually been a study done on this where people have kind of marked large rocks that were part of a gravel bed and found after the flood there were still rocks in that gravel bed, but they were different rocks. They weren't the same rocks. Those rocks moved downstream or replaced by other rocks. So without sort of a scientific approach to stream management, I know that after a flood, there's a tendency, we need to get this stuff out of there. And certainly there is material that you do need to get out if you're potentially blocking a bridge, blocking a culvert, causing a clear and present danger. But a lot of the work that's done in the streams with heavy equipment is counterproductive. It makes the threat higher rather than lower. The other thing that you want to avoid is taking material out of the stream and leaving it on the stream bank. And what you do when that happens is you leave an unconsolidated berm. Two things happen with these unconsolidated, well, three things happen. One is that you kill the streamside vegetation, which makes the stream bank even more prone to erosion. Second is that you're creating an impediment to the flow of water that wants to spread onto the floodplain, which is going to force the water higher. By forcing it higher, you're making it go faster, you're making it even more dangerous, more erosive, and because it tends to be an unconsolidated, unengineered berm, at some point that berm is going to blow out, and you're going to have catastrophic damage in that location rather than the damage that's caused when the water gradually comes up. And call DEC with questions, whether it's questions about the floodplain permit requirements, in which case you can call our New Paltz office, talk to Mark Lewis, or you can call my office up in Albany, or with stream permit questions, then the New Paltz office would handle that. So let's talk a little bit about risk, figure out where I am here. What this chart tries to do is it looks at, and it's kind of what I showed you before, but some people see it on a chart a little better. This is the flood probability of a 100-year event, of a 1% flood over a 30-year period. So what we're saying here is that the 100-year flood has a 26% probability over 30 years, and these are floods of different magnitudes. So the 500-year flood is a 6% probability over 30 years. The 50-year flood has a 45% probability. The 25-year flood has a 71% probability. And the 10-year flood has a 96% probability. That's over any 30-year period. And then what do floods do to the structures? Well, the Corps of Engineers, and this is just one chart, but the Corps of Engineers has done a lot of analysis looking at actual flood events and what they do to different kinds of buildings. So this is one example, a category of buildings, a one-story residence with a basement. And they looked at the height of floodwaters compared to the first residential floor. So in other words, when you're talking about the water being -5, it means that it's 5 feet below that first residential floor. So you've got some water in the basement. So the floodwaters being at 0 means that it's filled the basement, it's up to that first floor. Now what they're saying is that on average, for this type of a structure, a flood that fills the basement and hits the first floor results in about 25% damage to the value of that structure. Once the floodwaters get up to about 3 feet above that lowest floor over the basement, we're talking about approximately 50% damage to the value of the structure. And this is an average, so a better built structure is not going to suffer as badly as an only fairly built structure. And the Corps has curves for other types of buildings as well, so I just present this as an example. So what I'm going to do now is launch into the flood insurance side of things and what's changed and why it's changed and what the ramifications are going to be. So I looked at different data at different times, both for New York State and for the nation. So in New York State, and this was kind of interesting because if you look at this date, November 2010, this is before Irene and Lee hit. This is where we were at the time, about 163,000 flood insurance policies in the state, about $147 million of policy payments annually, $38.6 billion in property covered by that flood insurance, 84,825 claims historically in the program, and $631 million paid out in claims. So then I looked at data for last summer. So this was after Irene and Lee, but before Sandy. And the number of policies went up. More people saw the need to get flood insurance, or more people were told by their banks that they had to. The premiums went up a bit. The amount of coverage went up a bit. The number of claims had gone up. There were some floods that year. And the amount, I misstated this. This is after Lee and Irene. So if you look at the difference between here and here, Lee and Irene can account for that. Sorry, I made a mistake on that. So figure about $600 million in claims for that Irene and Lee period in New York. Then we had Sandy hitting the coastal areas, and the number of policies went up again. The amount of premiums went up. The coverage went up, but not drastically. But look what happened to the number of claims. We've got close to 60,000 claims out of Sandy. And those claims, and this was data that I pulled together in March, so if I was to pull it together again, those numbers would probably go up again. So think about nearly $2 billion in claims in New York just from Sandy. Now, if we look at the United States as a whole, you look at 5.6 million policies, 3.6 billion annually paid in premiums, $1.3 trillion in coverage. That's the liability of the National Flood Insurance Program. About 2 million claims to date and $45.5 billion in claim payments. Now, prior to Sandy, the National Flood Insurance Program was $18.8 billion in debt. Most of that is attributed to Katrina, and that was when the program went deeply in debt. And Congress had been debating for years. Can I use debate and Congress in the same sentence? Congress had been debating for years about what to do about this debt. Do we write it off? Do we force them to come up with some way of paying it off? When the program goes into debt, they're authorized to borrow money from the federal treasury. That's where the taxpayer gets involved. But that's considered a loan that they pay back with interest. Prior to Katrina, they would occasionally go into debt, maybe as much as $1 billion or $2 billion, and then they would pay it off over the next few years. Katrina was the first event that put them into a deep debt that they were unable to pay off. And then Sandy came, and between New York, New Jersey, Connecticut, Rhode Island, and there were also some damages in the southern states, estimate about $9 billion more to be added to that debt. So the way the program worked prior to Katrina, it was largely self-supporting. It would go into debt, it would come out of debt. But the policy structure was never set up to handle catastrophic events. So the fund was never capitalized. Usually if you have an insurance fund, there's a capitalization, there's a minimum amount that must be set aside to pay for expected liabilities. The other thing, and this is something that still really hasn't been dealt with, about 1/3 of all the claims come from about 1% of all the policies. And those are the ones that have repetitive losses, repetitive claims. We still haven't done a very good job addressing that. Congress clearly wants the program to be on a sounder financial footing, and this was the basis of about 5 years of debates in Congress with temporary extensions of the program. The program sunsets every 5 years, and Congress will usually extend it for 5 years. So for the last 5 years prior to a year ago, there were 16 or 17 temporary extensions in the program. A couple of times the program actually expired for several weeks. So Congress in July of last year passed the Biggert Waters Flood Insurance Reform Act. It extended the flood insurance program for 5 years, and it made a lot of changes. And I'm going to focus, it does a lot more than just the insurance side, but I'm going to focus on the insurance side. So, but beyond the insurance side, it makes changes to the way mapping is done. It makes changes to some of the flood mitigation programs. It makes some changes to how levees are considered. It makes some changes, allows community development block grant funds to be used for building code enforcement of the flood standards. And it authorizes a couple of dozen studies. So I don't know if you can read this very well. I hope you can. And this gets a little bit wonkish, but structures are divided into pre-firm and post-firm. FIRM stands for Flood Insurance Rate Map. Every municipality in the program has some date that they came into the program, that they got their first flood map. For most communities in New York, it's somewhere from the late 70s to about the mid to late 80s when communities got their first map. So any structures that were built prior to that were considered pre-firm. In other words, they were built before there were any flood design standards in laws and regulations. In New York State, about 79% of the state's building stock was built before 1980. So this is statewide. So that gives you an idea of the percent of structures that were built before these standards were in place. 75% of the state's flood insurance policies are pre-firm, and of those 132,000, 65,000 of them are paying subsidized rates. Again, those are subsidized by other policyholders. And then I broke it into the flood zones in New York. Close to 2,000 policies are in these coastal V zones. 83,000 policies are in these A or AE zones. And 91,000 policies are what we call the B, C, or X zone. That's the 500-year flood zone, or even no flood risk designated. And I was surprised when I saw that number. The only way I can figure that out is that we've had a lot of new mapping, and up until now, people that are mapped into a flood zone have their flood insurance rates grandfathered. So they might be in a flood zone, they might be pre-firm, but they're paying an X zone rate or a preferred risk rate. A lot of that, frankly, is down in Long Island, where the flood zones got much larger in a few areas. So how you break that out into what people are paying, if you have a post-firm structure, it was built in accordance with those standards in place, the rates are actuarial. They're by law, they're set on an actuarial basis, which means that what you pay as a rate is supposed to reflect the actual risk of the structure. The higher you build the house, the lower your rate is going to be. As an example, if you have $100,000 in coverage and your lowest floor is 2 feet higher than that base flood elevation, your cost of that $100,000 in policy would be somewhere between $230 and $270 a year. That doesn't include contents coverage, which would be extra. Now, if you have a pre-firm structure, same situation, you're in a flood zone, the house was built in 1953, it's got a basement, was built before there were any standards for building in a flood zone, you're paying, at least until this law passed, you're paying a pre-firm rate. It's subsidized, but people are still paying over $1,000 a year, and they're complaining about it. But that rate is heavily subsidized by other ratepayers because that house is at much greater risk than the elevated house. And this is the scary figure. If that structure was based on an actuarial rate, and this is what FEMA estimates, that flood insurance risk-based rate can be as much as $9,000 a year. Within your flood zones, people who live in the V zones pay the highest, even if it's an actuarial-based rate. So if it's built to code, there's a lot of variables in it, but basically they're paying between $1,100 to $5,000 a year. And this is a house that's built to code. If it's pre-firm, a little bit higher than that. Because the actuarial cost, there's such a high risk in these V zones because of the wave action that even when you build it to code, there's a lot of potential risk. You had a question?
This was the law that was passed last year, and so this is already in effect?
I'm sorry?
These rates and these changes are already in effect, or are they being phased in?
I'm going to get to that.
Okay.
So the rates that I'm showing you now are what has been in effect before the changes.
Okay.
So the A zone rates, if you're built to code, BFE, base flood elevation plus 2 feet, $230 to $540 a year, depending on how much insurance you're purchasing. The range is based on either $100,000 of insurance or $250,000, which is the maximum you can get. If it's a pre-firm, again, $100,000 to $250,000, you're paying $1,050 to $2,750, and you're not happy about it. If it's a B, C, or X zone rate, and you don't have a claim history, you can get what's called a preferred risk policy, $282 to $417 a year. That includes contents. If it's an X zone rate and you have a claim history, then you're going up to $721 to $1390. So these are last October's rates. These are the rates that haven't gone up yet. So here's what's changing. Congress was very clear that they want to phase out these pre-firm rates. And what they did, and I want to make it very clear, Congress did this. Congress passed this law and told FEMA that they must do this. FEMA's carrying the message, but Congress passed the law. So the non-primary residences, second homes, businesses, commercial structures are being phased into an actuarial rate. This is beginning for business properties next month. The actuarial rate is also being phased in for any property that has insurance damages that cumulatively exceed the market value of the structure, or a severe repetitive loss, which means 4 or more damages of over $5,000, or 2 or more damages that exceed the market value of the structure. What happens with these, this category is beginning this year, upon annual renewal of any flood insurance policy, the rate is going to go up 25% per year until that actuarial rate is hit. Now, this is the kicker. This is the one that, frankly, the previous slide I expected that to happen. This I didn't expect. They said that, let's say you've got an insurance policy. It's a primary residence. You've had your insurance policy all along. You will maintain that pre-firm rate, except for the normal annual rate increases that you've seen all along. That's not going to actuarial. However, when you sell your house, the buyer is going to have an instant actuarial rate, no phase-in. Close a sale, buy your insurance, $5,000, $6,000, $7,000 for flood insurance, up to $9,000, depending on how much flood insurance is required. If you let your policy lapse and go to buy a policy, again, instant actuarial rate. If you buy a policy for the first time, instant actuarial rate. If you've been substantially damaged or substantially improved, that's an instant actuarial rate. That shouldn't be a big deal because that house should be built back to code anyway. FEMA expects to start implementing this coming fall. They haven't quite worked it out yet. There's been a lot of movement in Congress to delay things. They haven't made any changes yet, and it remains to be seen what Congress will decide to do. But you know, the real scary thing is that this is instant. So you have your house, you're in the floodplain, you're paying this pre-firm rate, and it's not going to hit you directly in terms of the rate that you're paying now. But when you go to sell your house, the house is going to, you're going to have a difficult time selling your house, and that's certainly going to have impacts on property values and the ability to sell, and even on tax revenues. Now, this won't affect the people here in Dutchess County because you've already got your new map. But another change in the law is that it's always been the case that when a flood map changes, your flood insurance rating is based on the map in place at the time your house was built. So if it's a pre-firm house, you still get the pre-firm rate. If you, let's say you've got a newer house and you're in the flood zone, but the flood elevation went up, you would still be rated based on the previous flood elevation at the time that you built your house. Congress said that that's going to be phased out, and that if your flood map changes, then you will go to an actuarial rate, and that change will be phased in over a 5-year period. In other words, they'll take the difference between the actuarial rate and what you're paying now, and 20% of that will be added to your insurance rating policy every year. FEMA doesn't expect to start carrying this out until sometime in 2014, over a year from now. And there's some pushback on this, of course, in Congress. My concern, and again, this isn't going to affect Dutchess County because you've already got your new maps, but one concern that I have is that we have so many areas where maps need to be updated. They don't reflect the current risk. And if it's going to affect people this way, local communities are going to push back very hard on any map changes, even if they're very sensible map changes. Some other changes. FEMA has always been limited to no more than 10% of annualized rate increases. That limit has been changed to 20%. Doesn't mean they're going to increase everybody's rate 20%. In fact, they announced the rates for next fall, and if you're in the same category, you're not going into this phase-in of actuarial rates, it's going to be significantly less than the 20% for most people. Most people will be less than 10%, but they're allowed to go 20. They're allowing premiums to be paid Currently, you've got to pay your premium up front. Some people escrow it on their mortgage, but they're going to allow premiums to be paid in installments or annually. The third bullet's a good thing. Lenders are required by law to require flood insurance as a condition of a mortgage if the structure is in a flood hazard area. Some lenders, and frankly, they tended to be the national banks, the big national banks, they're required to give people 45 days notice to get their flood insurance, but if somebody doesn't respond to that quickly, some of these lenders have been forced placing the insurance and taking a hefty fee in addition to the insurance cost. So Congress did push back on that. If a bank force places someone's insurance and you could show proof that you bought your own insurance, the bank has to accept that and refund what they took from you. They raised penalties on lenders for non-compliance. So a lender is required to make a homeowner get flood insurance as a condition of a mortgage if they're in the floodplain. There's compliance penalties, and those penalty ceilings have risen. So the banks will be taking this very seriously. There's no limit. It used to be, let's say FEMA went after, some, national bank, I won't name one, and found that they weren't carrying this out, they would fine them up to $100,000. Well, for a big national bank, what's $100,000? So they removed that limit on fines against the banks for not requiring flood insurance. So they did all this with the goal of paying down the program debt, establishing a reserve fund, setting rates to cover actual historic loss years, including catastrophic loss years, requiring a 10-year repayment plan of this debt. FEMA's already said there's no way they're going to be able to pay it off in 10 years. There is an out to report to Congress why they can't. The next one's interesting. It overtly allows private insurance to satisfy coverage requirements. Private insurance has not been disallowed from doing this, but they haven't gotten into it. But it seems like Congress wants to encourage the private sector to start getting into the flood insurance program. With FEMA's rates going towards actuarial rates, though, what you'll probably see is some private insurance companies will think that they can compete with FEMA and maybe they can make a profit. My fear is that if they choose to do that, they're going to cherry pick. They're going to pick the least at-risk structures so that the most at-risk structures will stay in the federal insurance fund, making that even less stable than it is now. Another issue, not a big deal up here, but certainly with the hurricanes on the coast, there have always been issues with allocating damages between wind and water. Private insurance covers wind damages, national flood insurance covers water. You get a big hurricane, the house is gone. How do you figure out whether the house is gone because of the wind or because of the water? So there's Congress established a process to try to negotiate that. So the bottom line on this, the subsidies are going to be eliminated. This is going to mean big increases of cost for some property owners. Properties that don't meet the current building standards will see the biggest increases. Properties that do meet the current building standards will still have very reasonable flood insurance. So what can we do about it besides ranting and raving, which we've all done a lot of? A couple of things, and I don't have anything that's going to solve this problem, but certainly there are opportunities. Because of Sandy, there's another round of hazard mitigation grant funds. I encourage all communities to get their notices of intent into the State Emergency Management Office. If you go to, I think it's sandyhelp.gov, I think that's the state's website on that, it'll link to that. August 1st is the deadline for letters of intent. The applicant has to be a municipality or a county, and they look favorably on grants to elevate houses in place or to buy out flood-prone houses. There is a 25% non-federal match required. The community rating system, I'm going to talk about that as we move forward here. That is a program that FEMA has where municipalities who do more than the minimum standard can generate points towards flood insurance discounts throughout the community. Increased cost of compliance. Now, we haven't had major damage from Sandy here, a little bit of damage from Irene and earlier floods, but if a structure is substantially damaged to more than 50% of its market value, and it's in a mapped floodplain, it's the responsibility of the local community to make sure it be rebuilt to code. But if the local community declares that it's been substantially damaged and sends a notice to that homeowner, they are entitled, if they have flood insurance, to an extra policy on their flood insurance that will grant them up to $30,000 towards the cost of bringing that structure to code, either elevating it, demolishing it, or within the rules, even moving it. There was, not using this program, but I know in Schoharie County a few years back, they took an old historic church and actually physically moved it out of the floodplain. People that are going to be hit by this high flood insurance really need to think long-term, and it may be worth your while to really think about what it's going to cost to physically elevate the home. In some cases, depending on how the home was constructed, it may not cost as much as you think. I'm not going to say it's cheap. If you're getting the machinery under the home and just physically lifting it up and building a new foundation under it, yeah, it's going to cost $80,000 or $90,000 probably. But if you've got a home that's already on some sort of a crawl space, maybe it's got a basement underneath it, but the first floor is at or above that flood elevation, maybe you have a way less expensively to elevate the utilities, fill in that basement area, put vents in. It may not be that expensive, and that's going to significantly lower flood insurance rates. These houses that are brought to compliance, not only is their insurance going to go way down, but the marketability of the structure will stay there. So these are numbers that we got from downstate after Sandy. Figure about an average of $90,000 if you're going to bring in equipment to physically lift the home. Once you have that equipment in, it doesn't cost that much to go higher. Also, when you're building a new house, it doesn't cost that much for each extra foot of elevation. So figure about, plus the cost of getting the equipment in place, about $1.06 per square foot of building footprint per additional foot of elevation. So for instance, you've got a 1,000 square foot footprint, you've already got the machinery in place, which is the costly part. Going up an extra foot is going to cost a little over $1,000 extra dollars. This is a FEMA slide. And when FEMA released it, I thought that FEMA headquarters might pull back on it, but they've been circulating this. So this gives you an example of what $250,000 worth of flood insurance might cost for a structure that is 3 feet above the base flood elevation, at the base flood elevation, and 4 feet below the base flood elevation. In other words, a basement below the base flood elevation. That's significant, and these are the houses that we're going to see significant impacts on as we move forward. One of the other things that yes?
You've been talking about flood waters that come like down the street. In the community that I live in, the entire community was built on a high water table, and so the flooding doesn't come into the houses.
It's high groundwater.
It comes up from the ground through the basement floors.
Okay,
So is that flooding?
that gets the definition of flood.
That's what my question is.
For purposes of flood insurance, the definition of flood, something that you're covered for under your policy, has to be surface flooding. So it's not just groundwater comes up and floods your basement. It has to be water on the surface, but that water has to affect either 2 acres plus of area or portions of 2 or more properties, but it has to be overland flooding of normally dry land. Does that answer your question?
Yeah.
Okay. So a couple of other things that they're doing in the program with the new law. They're combining some separate flood mitigation programs, so there's going to be $100 million per year nationally. Not that much when you spread it throughout the nation, but that's available annually for mitigation approaches to elevate or buy out flood-prone properties. It's not dependent on a flood, but it would be applied to people that have flood insurance. The idea is to get them out of the riskiest part of the program. And it also changes the federal cost share or the local cost share. So if it's a severe repetitive loss property, what the feds are saying is we'll cover 100% of that cost of elevating or buying out. If it's a repetitive, and this is just goes to definitions, severe repetitive loss, 4 or more losses, $5,000 each, or 2 or more losses that exceed the value of the property. Repetitive loss is just 2 or more losses. So that 90% federal cost share, and other structures that don't hit those other 2 categories go back to the 75% federal share. For any of these flood mitigation programs, now for the ones that are labeled flood mitigation, up until now a flood mitigation plan is required, but as a separate plan. But what Congress did with the law is they said if you have an all-hazard mitigation plan and it includes flood as part of it, that counts towards eligibility for these flood mitigation programs. It also allows you, if it's cost effective, let's say you have a ramshackle old house and it really isn't cost effective to elevate it, there is the ability within the grant program to do a demolition and rebuild to code. They do some changes about levees. They're, the only levee I'm aware of in Dutchess County is a private one down in Dover. But we've had difficulty with showing these levees as offering flood protection. We call it accreditation on the FEMA maps. So they started a process where FEMA and the Corps of Engineers have to work together to help on that accreditation process. They've also allowed for flood rates, insurance rates to reflect the protection that will be offered by levee construction that's in progress. The law allows you to use community development block grant funds for building code enforcement, for increasing staff, for training, and also for providing hazard insurance information to residents, as I imagine the federal government will probably be putting out some guidance on that. Myriad of studies. They want, it's either the National Academy of Sciences, FEMA itself, other federal agencies, to analyze coverage limits, analyze private insurance, do a study of the financing of the program, the nature of losses and analysis of the nature of losses, a study of risk behind levees. They recognize that this pre-firm category is a big deal, so they do authorize a study of what is that building stock, what's the length of ownership, what's the income, comparison of losses between pre-firm and post-firm, cost of the subsidies, options for eliminating the subsidies, a study of privatization and reinsurance, a study of the using the nationally recognized building codes as part of the floodplain regulations. We already kind of do that in New York. A study of providing insurance coverage for business interruption and living expense coverage that currently isn't covered by flood insurance. I put this in a highlight. National Academy of Sciences and FEMA are required to do a study of the maintenance of flood insurance. In other words, what will it take for people to maintain their policies, and the affordability framework. So here we are saying that insurance is not going to be affordable, but we need to do a study of affordability and giving people incentives to maintain their insurance. I'm very active in the National Association of Floodplain Managers, and we've been pushing very hard to get that study going, and FEMA's been lagging on it. Some of the bills in Congress are saying we want to delay any of these rate increases until that study's done. What the national flood groups are suggesting is that people should have an idea of what the risk is. So they're suggesting that if your actuarial risk is $9,000 a year, people should know that. But if there's a need to subsidize people so they can afford to carry flood insurance, that should be an overt subsidy rather than this sort of cross-subsidy among policy holders. And maybe there should be a voucher program or something like that. And they also is a study authorized on a national catastrophe insurance. And some people in the insurance agency world have been saying rather than flood insurance, wind insurance, earthquake insurance. Maybe everybody should pay into a catastrophic insurance fund that covers all of that. Options for the homeowner. Even if you have a pre-firm house with the basement, get an elevation certificate. Find out what you're dealing with. How high would you have to elevate to bring this into compliance? Get some idea of how quickly your phase-in, your rates are going to phase in. It just gives you a tool so you know what you're dealing with. Consider elevating your utilities, even if you have a basement. And I've talked to people at FEMA about this. Would you consider giving some sort of break on insurance? Let's say the house has a basement, but the basement is cleared out and all the utilities are elevated. And this is a person that does insurance rating for FEMA. And he said, well, quite frankly, for houses with basements, because we don't cover the finishings in the basements, the vast majority of our claims are for replacing the water heaters, the furnaces, that sort of thing. So it makes sense for them to analyze how much of a break you can give to people for elevating those at-risk, most at-risk parts of the structure and help people get back into their homes more quickly after a flood. This isn't a done deal, but I could promise you that FEMA is working on this and studying it. And people really should look, the people who can't afford to finance it should look at long-term financing of actually bringing the house into code compliance. And here's a couple of examples. This is a house across the river in Ulster. Maybe not the most attractive house in the world, but it is compliant. I hope this homeowner isn't sitting here and I'm making fun of his house, but here's the lowest floor here. We have a lower level here. It is used for building access, storage, or parking. That's allowed. And it's got vent openings. Those openings are a little higher than they should be, but they should be a little closer to the ground. But the purpose of those openings is to equalize the flood forces on the building. This is a house in East Rockaway down on Long Island. When we were working with some communities after Sandy, a few of the local officials that we talked to, we said, do you have any examples of structures that were built to code with the 2 feet of freeboard and how they fared at Sandy? And this was one. This home was remodeled early in 2012, and the code official apparently had a big fight with the homeowner saying, this is a substantial improvement. You've got to elevate the structure. You've got to put in vent openings. The only thing I see that I don't quite like is it looks like there's an air conditioning unit that's a little lower than it should be. But what they told us is that the owner begrudgingly accepted and rebuilt this house to code. The neighborhood for Sandy took on about 4 feet of water. The water in this house got up to the top step, but didn't do very much damage to the structure itself. And the building inspector told us that the homeowner thanked him for making him build this way and now feels guilty because his house didn't get much damage and all his neighbors were devastated. So kind of in conclusion of this part of it, FEMA is required by Congress, and then I'm going to talk about the community rating system for about 10 minutes and then I'll be finished. FEMA is required by Congress to establish actuarial rates. So right now the rating only looks at the lowest floor and the base flood elevation. That's how they figure it out. So we're promoting our National Flood Group. I've been pushing this idea. FEMA needs to be more creative about setting actuarial rates. Look not just at the depth of flooding, but look at the frequency of flooding. Look at partial mitigation efforts, elevating utilities, wet flood-proofing basements, allowing basements to fill with water. We have issues in urban areas with large multifamily buildings. Currently, residential buildings cannot be flood-proof. They must be elevated. But it seems that if you have a large multifamily building with professional management, non-residential structures can be legally flood-proofed. Why not apply that to large residential structures? Consider tying long-term flood insurance financing to funding of mitigation. In other words, you use the decreases in flood insurance to fund some of these mitigation efforts. And some people are talking about community-based insurance where the individual doesn't buy insurance. The local community does, and that insurance rate is based on the overall risk within the community. It's kind of controversial, but it's something that some people are talking about. This gets back to the cost of elevation. So a 2-story house, 1,000 square feet, figure you elevated an extra foot, it's about a little more than $1,000 a foot, and this is your break on insurance for doing that. So this is $250,000 in coverage. If you go up a foot above base flood elevation, it takes you less than 2 years to pay off that extra foot. If you go up 2 feet, and this is the state code, 2.8 years, 3 feet, 4 years, go up 4 feet. The insurance rates don't drop as much, but it'll take you about 5 years to pay that off based on, the savings of insurance. Now I want to talk about the community rating system. What the community rating system is, it's a program that FEMA has that provides flood insurance discounts to all flood insurance policyholders within a municipality that take steps that go above and beyond minimum standards. It's not going to get your actuarial rate back to, it's not going to get your $5,000 rate to $1,000, but it will provide discounts. For most communities that get into the program, it's a 5 to 10% discount. We have a couple of communities in New York that are down to a 15% discount. It's class 7. Nationwide, you can get as much as a 45% discount, but there's only a couple of communities in the country that have gone that far. But some of the things that can get you in there, stormwater. There are state stormwater requirements. Some of you are MS4 communities. So some of the things that you're already doing for stormwater management can get you points towards the community rating system. Some of your hazard mitigation planning efforts can get you points. So the goal of the community rating system is to reduce the flood losses, facilitate accurate insurance rating, and promote awareness of the benefits of flood insurance by making it more affordable to people. For a community to get into it, when I say community, I'm talking town, city, or village. You can't do this on the county level in New York. But for a community that's interested, there's an application process, there's application worksheets, there's documentation that certain activities are being done, and there are menus of activities. It's not that you do every activity on the menu, but there's menus of activities, and for each activity you get points. The FEMA regional office or the state would be required to review and comment on the application. It would also be required that we do a community assistance visit prior to a successful application. Basically what we need to see, what FEMA needs to see, is that there's no history of violations of the code within a community that gets into the CRS. The way you do it, you let my office know of your interest. There would have to, and I can give you a sample letter if you're interested. There would need to be a letter of interest signed by the chief elected official. That letter goes to FEMA. And again, I can provide you with a template if you're interested. DEC or FEMA would then conduct a community assistance visit. And if it's a successful community assistance visit, then a FEMA contractor would come out and do a workshop and give you some of the details on how to get into it. FEMA would verify the information on the activities, establish what credits you'd be eligible for, and notify the community. You then go into the national insurance manual as a class, whatever you are, and then the insurance rates within your community upon renewal would get that discount. So this goes into some of the classifications of activities. There have been some changes in the points recently, but if you require elevation certificates for every development, structural development in the floodplain, you get points for that. You provide people with map information. Now you've got a new flood map. There aren't paper copies of this map. It's all digital online. If you let people know, maybe through a tax bill stuffer or through a public notice on your website, that this is where you go for flood map information. I believe Dutchess County Planning has a map overlay, so that will certainly get you points. The state provides some points because there is hazard disclosure requirements in state law. When you sell a house, you get some points for that automatically. You provide materials in a public library on flood risk, flood protection. You go to FEMA's website, there's a whole slew of materials that can be downloaded and printed out. All you need to do, and it's free, all you need to do is put it in the library. Provide flood protection assistance to residents and businesses. And then there's the mapping and regulatory activities. If you maintain additional flood data, maybe there are dam break analysis information, maybe there's engineering information on an otherwise approximate study, and you maintain this information, provide it to people, you can get points for that. This is in some ways an easy one. If you have open space, it's park land, it's natural, conservation land, whatever category it is, and it's in the floodplain, you get points based on the acreage of open space. It could be a soccer field, but it's open space. It doesn't mean you can't use it, but you get points for that. Every community in the state gets points because of the state's 2-foot freeboard standard. The state already did that for you. Flood data maintenance, people have letters of map change, you maintain that data. Maybe you capture high water marks from flood events, maintain that data. So that gets points. And I highlight stormwater management because a lot of those are things that communities are already doing that you get points in this program for as well. For instance, you can get up to 225 points for controlling peak runoff from new development. You get up to 225 points for a regulatory program based on a stormwater management plan. Erosion and sediment control regulations up to 45 points. Water quality regulations for new development up to 25 points. For each accumulation of 500 points, you get another class. You start as a class 10, 500 points class 9, 1,000 points class 8. For each additional class is an additional 5% discount on people's flood insurance. Flood damage reduction activities. If you focus on your repetitive loss structures and have a plan that when mitigation dollars become available, you're going to apply them to those structures, you can get points for that. If there's an acquisition and relocation program, retrofitting, drainage system maintenance, you've got drainage systems along roadways, along developments, you've got a maintenance plan for that, you get points. I feel like that Progressive insurance commercial discount. Basin debris removal, you get points. Stream dumping regulations, you get points for that. Flood preparedness, if you have a flood warning system, that generates points. Every community, actually that's been changed. They've downgraded our dam safety program, not because we've done anything, but they've just redone some of the point structures, so it's now 45 points rather than 60 for the state dam safety program. So that's, again, if you represent a community that's interested in this and you think you're doing a good job in the program, get in touch with me and I'll let you know what the next steps are. So this is my concluding slide to just say, that the risks really are very real. The cost to the taxpayer, the cost to the landowner are real. And what we're seeing is, yes, Congress came to the stage to pass a Sandy relief bill. There was a lot of debate that almost didn't pass. And I think what we're going to see in the future is Congress is going to become less and less willing to pass massive disaster relief bills. People do really need to take some steps to protect themselves. So build higher. If somebody is developing adjacent to a flood zone, they're not required to build higher, but recommended. The maps can change. Flood zones do change. And the climate is changing. We're seeing more frequent high flood events. The cost of building higher is far exceeded by the reduced risk and the lower flood insurance, and just the fact that you'll have a more resilient community. Gilbert White was a gentleman, he passed away recently at the ripe old age of 94. He was the founder of floodplain management. He was the first person nationally and he worked in the Roosevelt administration, that he came up with the concept of the fact that we cannot engineer our way out of floods. What we need to do instead is manage how we develop our land so it's less prone to floods. And there's a quote from Gilbert White that floods are an act of God, flood damages are an act of man. So that's what we're trying to produce here or convey here, is that people do need to take responsibility for their own risks. But we do recognize that the changes in this law are going to have serious impacts within communities throughout the state and throughout the nation. Thank you. Do you want
So
to?
at this point, we still have over a half hour left where Bill can take any questions that you have on the information that you today. So if you have questions for him,
One thing before you start asking questions, I might say, Bill, we didn't set up for the portable microphone. So if somebody asks you a question, could you repeat it up there so the viewing audience can hear what the question is?
Certainly. Yes, sir.
It's going to sound a little odd, but it's what we face most every week when we have people come in, especially when the maps change. We have more and more people that are required to have flood insurance as a result of the map change. A number of those people expressed to me and to the staff that this is a result, the mapping may not be a result of increased risk, but the need for increased premiums and a broader base because of the losses from the recent 4 or 5 years, starting with Katrina. And as best I can do, I try to explain, no, it's very scientific, and we have a lot of tools that are used to create this mapping, but there is some, I'm sure you've heard of this, people, maybe I'm saying it more direct than most people who aren't here, but we get hit with that all the time, and if you could give us some tools on how to handle that, it would be helpful.
And the question has to do with people saying that the new mapping has less to do with increased risk than it does the need to put more people into the insurance fund and pay it off. Let me talk a little bit about the history of the mapping. Is that we've had our old paper maps, they've been around for 30 years. The studies are 30 years old. And in the late 90s, people started getting together and saying, well, the technology has changed. We've got the ability to have more interactive mapping, the geographic information system. And the studies are frankly old. So every flood study is limited by the period of record that you have to go on. You've got 30 more years of record. You know, you've got a more accurate study. So it was a consortium of real estate interests, banks, insurance interests, environmental interests, and people, emergency management folks that all came together in a task force and said, we need to modernize our maps. Congress passed this. President Bush actually submitted this in 2003, and Congress passed the map modernization program to spend $1 billion over 5 years to modernize the nation's flood maps. The need wasn't $1 billion. We didn't know it at the time. The need was more like $3 billion. But within New York, working with FEMA, we tried to prioritize the areas that we thought were most at risk, and the way we did that is we looked at population, we looked at the pace of development. This is a rapidly developing part of the state, and these maps are going county-wide, so it's one of the reasons why Dutchess County did get elevated above some other parts of the state. In general, not necessarily the case everywhere, but nationwide with map modernization, about as many properties were removed from the flood zones as were added. So if FEMA was only doing this to increase the number of policies, they're not doing a very good job of it. But it certainly does affect the people that were moved in. And I'm not saying that there aren't mistakes on the maps. Every map has a mistake. 2 engineers can look at the same stream and do a flood study and come up with somewhat different results. It doesn't mean either one of them is wrong. And I've got the engineer who's nodding his head. But certainly, that person's not going to believe what I say. He's not going to believe what you say. But
They think it's a conspiracy
but-
by the government to
yeah.
get more money out of it.
and I can assure you that's not the case, but I understand that it affects certain individuals.
What does someone do then if they do question the flood mapping, if they're in a floodplain now? How do they go about having that addressed?
Okay, so how does somebody go about addressing it? Basically, you need to prove that the map is wrong. There's a couple ways of doing it. Let's say you're on the edge of the flood zone, and these maps they determine a flood elevation. And even in the approximate flood zones, there's a flood elevation in the model. It's just not as detailed. They then look at the ground elevation and draw a line where the flood elevation intersects the ground elevation. Where that line is drawn is based on a topographic model. It's done by a combination of LIDAR, which is an aerial topographic model, which is supplemented by ground survey along the streams themselves. But the LIDAR is accurate in general to about plus or minus a foot. FEMA standards are that each LIDAR point, they ground truth a bunch of LIDAR points, and 95% of them have to be within a foot of reality. So let's say you're just barely in the flood zone. There's a possibility that if you hire a surveyor, that surveyor will find that your lowest ground is actually a little higher than that flood elevation, and then you can get what's called a letter of map amendment. That gets you out of it. If you're deeper in the flood zone and you can't show that, then it's really, unfortunately, it's really a matter of having to somehow redo the study. And that becomes more expensive and more difficult.
Along that line, I believe that a lot of the flood mapping, wasn't there not an elevation established in some of these flood zones? So I could say, like, this is my house elevation, but I don't know what the flood elevation is because it wasn't determined in the flood map. Is that correct? This was mapped, it was an
Right, these A zones, these approximate flood zones, there's no elevation on the map, but the good thing is that the new studies, even though the elevation isn't on the map, the elevation is on the GIS information behind the map.
Oh, so there's actually an elevation, I could find it in A zone?
If you've got the GIS data behind it, you can find it. Otherwise, you can call my office. I can go into our GIS and dig it out. FEMA doesn't use it for insurance rating purposes because they don't consider that it's specific enough, but they would use it as input data for a letter of map amendment. Anyone else? Yes?
How many municipalities in New York or the Hudson Valley are part of the community rating system?
How many municipalities in New York are part of the community rating system? Far too few. I don't know of, there's a couple in Westchester. I don't know of any in Dutchess County, and there's only about 26 communities statewide, so it's far too underutilized, and it's one of my pet peeves about the program. I was on a conference call for an hour and a half today with people in FEMA headquarters, and people in FEMA headquarters do not understand the Northeast political geography. They understand a situation where the level of municipal government is basically on the county level. And when you have county level government like you do in Florida, you've got big planning agencies that can work on getting into the community rating system. I visit Florida every year because my mother lives down there. And when I tour the coast of Florida, I know that they're not enforcing things any better than we are. But most of their communities are in the community rating system because they've got the professional planning staffs to do it. We're in effect subsidizing their insurance rates. That bugs me.
Organization or municipalities could form a group to collectively pay someone, or someone could get, an organization could get a grant to do that work for a number of municipalities? Is that possible under the hazard mitigation?
And the question had to do with a number of communities working on this together. In the Southern Tier Central Regional Planning has a very active person in floodplain management issues, and she's worked with a number of communities down there in the Corning area and got about a half a dozen of them into the community rating system. Most of those are pretty small communities. When I go through the menu, you don't have to address every item in the menu. Most communities will address half a dozen, 8, something like that. Not every item. You get whatever points you can. Certainly it would be advisable if there was some sort of regional organization that can work with a number of communities on it. I don't know about getting a hazard mitigation grant to do that. Heck, it doesn't cost you anything to put a letter of intent together and try. Whether you'll be successful or not, I don't know. I don't know of any other grant that's specifically for that purpose. Yes, sir.
Can we email you for a sample letter?
Yes.
To
I should have, let me give you my card. That has an email address on it. I should have put it on the slide. Anyone else? That's right.
I hope your inbox doesn't have a limit. I think you'll be getting a lot of emails.
Well, usually they look out 70 emails behind at any given time.
The preliminary valuations last year, which we put out, which added a lot of properties that were currently in the A zones into the B zone, and that was significant changes. And then obviously the new maps pulled that back, especially when there were ground studies on to show they didn't take into account the ground structures, tiles, and so forth. FEMA seemed to explain that that was necessary to go very conservative, but it did cause a lot of panic by people towards
You're
raising.
talking about recent mapping after seeing.
Yes.
I can address that. After Sandy, FEMA issued advisory flood maps in the coastal areas. And what happened with that was that FEMA was already doing a coastal analysis when Sandy hit for the whole coast of New Jersey and up into New York. And when Sandy hit, that study was about 80% complete. So FEMA decided, let's issue something so people had some guidance for rebuilding. But they hadn't completed the wave run-up analysis, so they did issue that with a very conservative approach. In New York City, they've since issued a work map in which they've done more of the analysis, and that's resulted in those elevations being lowered and the V zones getting a bit narrower. Unfortunately, and I don't know a good way of doing this, but there's a lot of people in New York and in New Jersey that think that it's because of their political pressure that those maps changed. And I'm not saying FEMA doesn't respond to political pressure, but they don't make technical changes because of political pressure. They might look at a site and pay a little more close attention, but they're not going to falsify something. Yes?
Does the community get points for rehabilitation of the dam, of the high hazard dam?
Do they get
Points for that program for like rehabilitation of a high hazard dam?
Question is, do communities get points for rehabilitation of a high hazard dam? I'm actually not certain. I'd have to look in the CRS manual to find out. You would probably get points though, let's say there's a dam break analysis and you make that information public. You would
PAP and stuff like that?
yeah, you would get points for that. It's just, flood hazard information. It doesn't mean that somebody in that zone outside the FEMA map flood zone needs to do anything. It's just an awareness and emergency response kind of thing. Scott?
Some of the, when it comes to local floodplain development permits, I often, besides the obvious building of a parking lot, building of a structure, there's these kind of fringe activities that seem to, people aren't sure if they need permits, like you're talking about, them, like clearing the riparian area for vegetation, or the replacement of culverts for stream crossings. Can you talk to some of the types of activities that may not necessarily be thought of as floodplain development activities, or need a permit that actually may fall into that? I imagine it's somewhat subjective to the enforcement officer that's enforcing the floodplain development.
Okay, so the question has to do with really what is subject to a floodplain development permit. FEMA has a definition of development, which is any change to improved or unimproved real estate within the floodplain, including but not limited to, and I don't have the whole thing memorized, but paving, excavating, fill, drilling. There's just like anything in the floodplain. So what I suggest to local communities is if there's heavy equipment involved, other than a tractor that's tilling corn or whatever, if there's heavy equipment involved and it's in the floodplain, it's subject to a local permit. And part of the permit review might only be, yeah, we've looked at it, we don't see that this is going to have an adverse impact, it's not in the floodway, you're fine. If somebody's replacing a culvert with a larger culvert, that's not going to be a floodway issue because you're making at least the immediate situation better. You might actually be putting more of a slug of water downstream, but.
Does your office provide any guidance for municipalities that might want to put in place a local ordinance to prevent any new development in the floodplain?
Question has to do with guidance towards preventing any new development in the floodplain.
Model ordinances?
I don't have anything specifically on that. Certainly in the early days of the National Flood Insurance Program, there were a lot of challenges based on the takings clause. You're taking private property without compensation. The courts have upheld these standards because you're not removing all use of somebody's property. You're regulating the use of it. I think if you were to totally restrict floodplain development, you might be subject to a takings challenge. But certainly maybe within the most hazardous areas, within the floodways, you might have better ground to stand on for that. You know, like a buffer along the streams or something like that.
Do you know of any municipalities that have done that?
I don't know of municipalities that have actually done that, actually banned development in the floodplain.
Or put limitations?
Or what?
Put limitations on the most hazardous areas?
Limitations, limitations on development. Certainly a good recommendation is some sort of a stream buffer, which is something that my agency has promoted for a number of environmental reasons, not just flood protection. We've also recommended that communities adopt a no net loss of flood storage. In other words, if somebody is going to put fill in a floodplain, have to remove a similar amount of material so you don't reduce the flood storage. So there are certain things you can do short of just a ban on all development.
Any additional questions before we wrap up? All right. Well, I would like to thank Bill once again for joining us this evening. We really appreciate your presentation and you being able to answer your questions. And I'm sure for those of you who weren't able to collect his contact information, I'm sure he'd be able to give that to you before you left if you were interested in contacting him with more questions. I do want to announce a few reminders. One, we actually did videotape. This session was videotaped and is being made available to us, so we will be able to post it on our website. So if any of your colleagues weren't able to make it tonight and you'd like them to see this information, just go to the website that's listed on this handout here, which is HudsonEstuaryResilience.net, and hopefully within the next coming weeks we'll be able to post that online. There's also a lot of other resources available, resources very useful to municipalities that you should take a look at on that website. Finally, please fill out your group form before you leave. If you need a municipal certificate of attendance so that you can get training credit from your municipality, Allison will be in the back of the room and will be able to give you those certificates, but she won't give you a certificate until you turn in your evaluation forms. So thank you again, Bill, for coming. Thank you all for attending.